All right. Hello, welcome everybody to the Saturday class. I hope you guys are doing well. Just let me do a quick tech check. Yeah, should be all right. So you guys simply complain if somebody's off as usual. I'm also playing with the sound of OBS a little bit simply because it's weird. It's showing me that it's going into the red, but people tell me it's uh too quiet. Yeah, good old tech stuff. But I think for you guys should be all right anyway. So yeah, good. Let's start right away. Market-wise, not a lot of things are happening. I mean, I talked about this in the stream already. Structural-wise, not much is happening. I mean, volatility is there, right? 10-15% moves across the board, but structural wise, I mean, we're not even close to anything here. And this is simply because volatility is increased, but at the same time, it's not enough to really break structure here. And we will dive a little bit into this lower time frame price action here because I think it's quite interesting for a lot of people, or for some people. Not that I would want to trade this, but it's actually a very good example of how to read market structure. And then we will do a market structure exercise with some of the crypto majors together. So let's take BTC for that. So if we look at the structure, right, let's start higher time frame wise. We talked about the BTC structure so many times, but at the same time, it's so important. It's so important for the rest of the market, but also to really understand the structure. And as I said, we are in a downtrend. And right now we're hitting range lows, swing lows, demand, the low of this range, whatever you want to call it. And we went long, or I went long on some altcoins. And the question now is, how far can we bounce? And where is the first area of resistance? If we are on the daily, this doesn't look like a lot, but if we drop a little bit down, we will see there is supply because we went sideways here for a bit and then we went down aggressive. And we went down really aggressive. I mean, we talk about like a 10% move in like one day, pretty much. And this, hello guys, and this makes this area supply and it makes it even a strong supply simply because whales sold very aggressive here. And while I'm not really trading this kind of structure, it's still important, especially because I have those altcoin longs and they pretty much hit the same kind of structure, right? It's always little bit different, but it's also always a little bit the same. And it looks a bit odd here on ETH, but you see it's pretty much same stuff going sideways for a bit. I mean, even a bit down here. And then this aggressive, impulsive move down, similar as on BTC here. And this makes it the first area of resistance on this level. And many people always ask me, where should I take profits? Where should I move my stop loss? And there is no easy and single answer to that. And this is why I I don't want to say I hate this question, but it's a very tough question to answer. And obviously for me, answering questions here, it's not the best situation to be in. But technically speaking, this is resistance. And if you go long, and I mean, if your stop loss is like somewhere down here, this is not a sexy trade, right? You don't want to like TP fully here because the RR would be horrible. But it's definitely wise to keep an eye on that. And while I don't do not trade those kind of structures, I'm definitely very aware of them, and I take them into account, especially now when structure is breaking down so aggressive and we are like in a higher time frame downtrend. I take them into account to remove some risk. And as I said before, I have the ETH long, I have AVAX, and I have ADA. And to me, it's pretty much the same position. And I want to remove some risk. I want to take some chips off the table. I want to lock in some gains. I want to remove some risk. And this is why I decided to TP overall now almost 73% of ETH. I mean, obviously the TP 40% is less after taking 33% and so on and so on. But obviously I took a big profit here. And I removed the risk on AVAX and removed my margin, and I did not touch ADA so far. And all of them are also based on my decisions based on BTC. And there's a very simple reason why I did that. First of all, first technical area of resistance, we filled this big FVG here, those big FVGs on the 12 hour. And now we are at the first big technical resistance, which is around the 0.5 of this down move and this big supply area here. Now, if we go further down, not as said, not that I would want to trade this. And you see we have this partial breaker block or whatever you want to call it. We closed above and all that, but in the end, the supply here, this whole area is important. If you refine it down to something, that's great, take your trades and everything, but in the end, whale sold aggressive after this little move to the side, and then we dropped aggressive. So if I would take a trade, I would definitely take those highs into account. And now let's dive a little bit deeper into the structure here. I know, as said, I don't trade it. And if you're a beginner, I would also not recommend to trade lower time frame stuff too much. I mean, it's nice for gaining experience. And it's also nice because we can talk a little bit more about market structure because, I mean, obviously on BTC, we will talk about the same thing over and over and over again. But looking here, we're making low lows, lower highs. And now there might be a change in trend. And we can first define this with a trend line. It's usually the first thing that breaks, not a sign that it needs to like change the whole structure, but it's sometimes a good early indicator of what is happening. So we broke it here. We can get a little more bullish and expect this area to hit, which hits. And now the question is, can we take out this area? Can we clear this area? This area is a very strong resistance simply because it's the 0.5, around the 0.5. I mean, it's a bit higher, but you know what I mean. And we have the supply area here. And if we are able to reclaim this, let's say we close above the 0.5 as well, do something like this. The next technical area of resistance would be the next trend line. This here, support and resistance flip. You see this level here, this whole area here. It's retesting this big range from up here from the lows, and it's around the 100k key level. So if we go up here, the 100k key level will definitely be a one to be aware of. And before we can entertain this, we need to clear this area first. And it doesn't make any sense to expect anything higher as long as this is not cleared. And as I said, I don't trade this, but I'm aware of the structure simply because I'm in trades. And sometimes I even TP a bit earlier and it's just 1 hour or something, but I don't really care because I remove my risk and I pull some money from the market. I don't like need to wait for something if the market is telling me it doesn't want to break this high, for example. And as said, if I have like 3 positions open, TPing one makes perfect sense from a risk management perspective. So first area of resistance. Now we can drop even lower and we can like look at what PA does within this area. You see, we have this crazy sell-off here. I mean, this is like massive FEGs. There is a lot of selling pressure here. I mean, it's Bitcoin, right? We have millions and millions of dollars moving to move price in this way. And we hit this area again. So we reject once, twice. We form this kind of range here, and then we do the spike, and then we nuke. And this is, to me, it looks very, very bearish for several reasons. First of all, we have those wicks here at the top. These are absorption wicks. And if we now compare it to volume, let's look at Binance for this. I talked about this in the stream as well, but I think it's worthwhile to dive a little bit deeper into this today because it's a very, very good example. And we have those wicks and we have those volume spikes. We have, first of all, like aggressive impulsive move into those FVGs. And we have here very, very high volume in this case. And we have another high volume candle. It's not as high as the one before, so it's not prime volume spread, but it's definitely still a lot of effort made, a lot of volume put in, and the result of this candle is like pretty low. So somebody's absorbing here as it seems. And we have another example. We have like above average volume creating this small FEG, which is good. We have another like spike in volume way higher, and we have less result. We have a big wick at the top, big shade at the top, smaller body. This is prime volume spread analysis. This is what prime volume spread. So higher effort, lower result, bigger wick at the top. Again, another candle, big wick at the top, above average volume. What do we have here? Big volume spike, big wick at the top, even negative result. And now we have this big sell-off here again. So does this mean we go down to 70K from here? No, this does not mean we go down to 70K from here, but this does mean here is absorption going on. We are at supply, and we should expect price to reject from here, regardless of our bias. And it doesn't really matter if this is now like low time frame. It's just about structure. It's not about like predicting price here. It's about just accepting structure for what it is. And as long as we are below this area here, price, we should treat this area as bearish zone. And if we want to trade this, we should take it as zone where we take shorts at until this area is broken. And you see those arrows, we maybe go up here and we reject and we go down, or we go down immediately, or we break above, we reject, and we then go higher. So there are millions of options, but we can manage our risk around this key level. And this can be TPing longs, this can be taking shorts, rather be on the sell side on these levels than on the buy side, obviously. And should we reject, we can then mark out the next level of interest, which would be this demand, or here some kind of breaker block, or the opposite pole, or whatever. And this is the next logical area we should expect from this point, maybe even like drawing it like this. But should we reject from here, we probably go to the 0.5 or even lower, and then we form some kind of range. And it's always a range until proven otherwise. So technically speaking, even though it doesn't look like one, remove this. Technically speaking, we could draw now this range here, and suddenly the bias looks kind of very different and the context, because this is now our range high, our supply. If we go down to the 0.5 of this range, would be maybe some kind of area of interest for a long. Not that I would want to long this, but you know what I mean. And if this is lost, we probably go down to the range low. And same story here. I could also inverse this chart. This one is an important low until proven otherwise. This one is important high until proven otherwise. And obviously, if we break out, we can entertain higher targets. If we break down, we can entertain lower targets. And it's always the same. It's on higher time frame, the same as on lower time frame. And it doesn't really matter what time frame you look at. You can apply market structure knowledge on every single time frame. And this is what I want to show here. And sometimes I even like consider stuff like that, especially if my bias is that we, for example, in this case, I'm long, but I expect more or less just a counter trend bounce. And this bounce could be up here, this bounce could be up here, but it could also simply fail here, right? We could also simply reject from here, range a little bit, and then we fail and go down to 2K. This is a possibility. Doesn't really matter what my bias is, doesn't really matter what I want, doesn't really matter how I'm positioned. The market could simply just do that. And this is why I removed some risk from the table, because this is the first logical area of resistance. And if you go higher, that's great. I'm still positioned, not like full size, but still. And as I said, same principle for everything. Like if you zoom way out here and you went long ETH here, you see this is some similar kind of structure, to be honest. This is what when I was looking at BTC here, like on this 1 hour, it reminded me a little bit of like ETH, right? So not completely, obviously. It's a different chart. Maybe we should even look at the 2 hour. But if you think about it, we have this last capitulation sell-off right here. Actually, it's not that great of an example. A little bit, a little bit. Yeah, it is. It is actually. It is. So we have maybe forcing the bias a bit more here. Yeah, this looks better. Maybe in the daily. And technically, this was the first area of resistance. So on BTC, we have this here, not the greatest structure, here a little bit and stuff. So let's imagine this is the first bounce, creating this. And then this comes, and then we hit the first real area of resistance, which is for BTC here. And you see what structure we form. We take the highs, then we break a little bit down. Maybe we take this low, maybe we go down here, and then we bounce again. So I'm not saying that because this is resistance, price couldn't go higher. But I'm bearish as long as I need to be locally, and once it's broken, we can entertain higher targets. And it's the same for ETH. Like structurally speaking, it did exactly this. Like we hit here, we take the high, maybe we break down now, do this prime opportunity to go long in this case, simply because the chart is at higher time frame discount, and then it breaks the level without looking back. And this could happen here as well, right? But it could also simply just break down. And also, nice prime example. I compare those two price actions because they look kind of similar. And you will, the longer you're in the market, the more intuitive, like looking at price action will become for you. And then you will start to see things like this. You say like, oh yeah, this structure looks similar. And this is nothing wrong, because it could play out completely like this. We can maybe look at Wednesday. On Wednesday, we look at the same price action, and we will either see it worked or it did not work. So we can also force the bias even more. Let's do this. But this is, and it's not me saying I know what's going to happen or something. It's like just as a funny exercise to show how prices simply may simply be just fractal in this case. Oh my god, wait, it's moving so crazy. Oh, oh, oh. And this, for example, could happen, something like that. Timing wise, it's a bit off. But the thing is, what I wanted to say is you will start to see things like that. But a good trader is not like, okay, this needs to happen. This makes so much sense, and I can convince myself and everybody like for 30 minutes that this is going to happen next simply because structure is looking like that. But I know that price could do anything from here. That's why market structure over everything. Once this breaks, good. Once this breaks down, we have to entertain lower targets, because then we start seeing more weakness again. And you see on lower time frame it gets kind of messy very quick. But this kind of knowledge applied on higher time frame and put into higher time frame context, the things I always say, like discount, premium, and all that, you know that seeing something like this might want to make you locally bearish, but according to the higher time frame context, we are still in discount. So expecting like zero from here doesn't make too much sense. You don't need to long, but if you bought down here, you also shouldn't be too scared, because it's still, everything is still in discount. And same story here. So I have my longs, and simply because BTC is hitting this like 2 hour resistance or 12-hour supply, whatever, I won't sell everything simply because I'm scared now that it's going down and whatever. It's always about context, and about and put into context, it's still a nice area to be long, technically speaking. But I'm still a little bit aware because, yeah, as said, I don't really trust this move so far. And the thing is, I expect a counter trend bounce, and I wanted to shave off some money from this counter trend bounce, hedge my short. And if this is like the counter trend bounce, and I mean, we talk from the lows, we talk about 20%. So percentage wise, it's moving a lot. But as said, structural wise, nothing really changed. It's still a downtrend. And so I rather take some profits off the table at this resistance instead of paying it all back. And you can do the same stuff on mid time frame, on low time frame, everywhere. And the beauty is, once you like got all this market structure knowledge, and once you also traded a little bit of lower time frame and like experiment with stuff, you will figure that you can trade higher time frame still, but you have also the lower time frame in context in mind. But it won't like affect your decisions too much. As said, I'm seeing signs of absorption here. I'm seeing price hitting supply, and is not really showing any real signs of strength here so far. And so I'm a little bit aware, but it's not like I'm abandoning my whole idea. This is important. If you take those things into context, all of this, all of everything we have seen now with me zooming in, is way less important than the whole higher time frame structure. And looking at higher time frame structure, there is not much which is holding price back right now. The first real challenge for this higher time frame trade begins here. And if I, for example, if I would have only, if we also pull a fib, it's probably around the 0.5. No coincidence here, around the 100K key area. So maybe taking 100K, making everybody bullish, rolling over again. This is basically my prime, or the main scenario I'm looking at right now. But I have taken 3 trades and I have taken a lot of risk, and obviously I want to reduce my risk, take some profits off of those positions. If I only had taken ETH, for example, I would probably be a little more aggressive. Would I would let this trade run a little bit more, but in this case, I was aggressive with my position opening, so I'm more aggressive with my TPing. And this is like you can shift your you can be flexible with that. It's not written in stone, and that's why like where should I take profits? Where should I TP? Where should I do this and that? These questions I can't answer them, and nobody will answer, be able to answer because it's you taking your positions, it's you taking your risk. It's 1%, 2%, maybe you took 5% or something. Obviously, if you take a 5% risk trade, you may want to be a little more aggressive in the current situation. But in another situation, buying BTC at, for example, a higher time frame lows at 16,000 in 2022, you may risk even like 5 to 10% or whatever because you're like really offensive in this case because you see that it's a prime opportunity. Obviously, you don't want to TP 80% at 20K simply because it's the first area of resistance, right? So it's so many things you need to take into account that there is no easy single answer. And the the better you can handle this kind of uncertainty and this flexible thinking and taking so many things into account at once, the better. Good. Um, I think that's my little rant, as usual. Why is why is my screen so buggy? Um, anyway, we can do the market structure exercise. I need, what's the word? What's the actual word? I need a volunteer again. Somebody who wants to, like last time, do the market structure exercise with me. I'd say we do it. Oh no, I don't want to spoil anything. I'd say we do it on a major crypto chart because many people seem still to trade crypto, right? And why not? Market structure is the same everywhere. And so I need someone who wants to do that with me. Okay, Rooney. Nice, Andy, that that you would do it again. But it's also nice if somebody else wanna do it. So let's pick Rooney this time. Rooney, I'm gonna bring you to the stage. Mhm. Just a second, Rooney. I need to hello, by the way, and I need to change the recording real quick, and I'm already overwhelmed as usual. So give me a second. Where is this? Ah, here we go. Yes, because otherwise people can't see your screen. Can you say something just that I make sure the sound is all right? The sound recording. I can I can hear you, but OBS can't hear you. Okay, back to the recording. It crashed. So Rooney is on the stage. Now you need to share your screen, please, Rooney. And I'd say we do tether dominance.
You're able to see the screen?
Yes.
Are you guys able to see the screen? Okay, so it's slightly busy.
Maybe you clean it up. Maybe Take a blank one, please.
Is that okay? Visible?
Yes, yes, looking good.
Yeah, okay. Yeah, okay. High time frame, I would kind of, from a market structure, go down from monthly and below. And, and yeah, if I have to like just mark some of the key, let's say, lows, I think, from a very uh, longer term standpoint, this is like really low. I'm just gonna skip some of these levels and go to maybe the 3% ones. So just marking some of the key swing lows, and I'll come a little closer to our time frame where we are right now. So 2.5 seems to be like an extreme low that we had hit somewhere around the 2022 cycle, or 2 point, a little lesser than that. And I mean, swing up, and this is another important low which was not sort of broken throughout this cycle around the 3.74 percentage mark, or I would say 3.7, yeah, 3.76. That was sort of a very important low throughout the cycle that I sort of noted, and it swung up all the way to, let's say, the top, at which kind of 9.465 was like the absolute top that we had observed, and I don't think we've beaten that till now. And this moved on to this swing low, not really relevant, but this was sort of a break of structure. This swing low breaking down was the signal for, let's say, further crash in the USDT dominance, which happened around 2023. This was around October where we actually saw the swing up in terms of crypto performance. And the this low has sort of been like I told you, the 3.7 has not really been breached, and it's been there. This is the monthly cycle. Right now, we come closer to our time frames. We've come close to that, but never really broken it. And this, I would want to mark from a swing back up. This was a break of structure here, and not relevant at this point of time, although I'm marking it at the higher time frame. And it further, again, sort of, this was an effort to break structure, but it eventually broke the structure here, 5.59.
If the
Uh,
monthly candle
if
closes here,
that is sorry, yeah, I missed it. Pardon, what did you say?
if the monthly candle closes here, this one is broken, the one you marked.
Yeah, yeah. So if the monthly candle closes, I think we've kind of broken structure here and it's actually gone up. Uh, like bringing that down to, from an overall time frame standpoint, if I just have to look at the larger time frame market structure, we had like this technically is that, let's say, sorry, I think I have to like change the. So we've kind of moved into a place which is USDT dominance being on the other side, is we're entering the discount area, right? I mean, is my understanding fine? So we are moving on to the other side for the first time, which is giving us an opportunity to long, which was sort of reflected in a lot of the positions taken inside our groups also. If I further break it down and come down to, let's say, a shorter time frame at a weekly level, uh, again, one of the key lows is 3.7, and it's going to remain an important level in the future. At this point of time, this doesn't have any significance. In this, this is an important break of structure. We've actually sort of broken structure, but we would kind of bounce back down. So this is a key level, 6.22. Breaking this would actually mean that we have sort of a movement upwards all the way up to like 6.5, and sort of this zone of 7.13. And that also puts us into sort of a bear market scenario, which kind of, we'll have to see how it goes with BTC and relevant performance across. Although, especially with USDT dominance in confluence with BTC, with the BTC crash and USDT dominance going up, is pretty much going to signal the start of the bear market in clear terms. At this point of time, it's not resolved. It's sort of unresolved at this spot. And I mean, can go further down to the daily structure. I think it pretty much is unresolved even at a daily, so it's still hovering around this area. I believe that if it just sorts of breaks this path and BTC going down is the start of the bear market, and would kind of mean that our BTC in confluence needs to kind of move in tandem down, and USDT dominance kind of, if provided the alts also kind of follow path, USDT dominance is expected to move up if that's the case. That's one of the scenarios, obviously. The alternate being that BTC continues to pump from there, we get a movement of this further, probably up and down all the way, resulting in not real clarity because we get into premium zone again for USDT. We come below the zero point 0.5 of USDT, and the market structure shows that we are at a premium zone in terms of pricing of crypto in general. So okay, that's my understanding. Is that fine? I think at a daily level, yeah, I think some of the key areas that I would mark here are in this currently, this would be another key swing low. Five. This is like a significantly decent move of over 1% all the way from six at this point of time. Another key level to mark is this one. Uh, and obviously a further below level of this, which is about 4.19. All these are premium USDT levels, the dominance levels. If we are going on the potential scenario that BTC continues to move up and has a sort of a swing up, I think we will be touching upon these levels, and we have to kind of, let's say, be aware of the swing lows. And as the structure breaks, we have to take it level by level.
Mhm. Great, great. I like it. For example, those one in this low in the middle, does it really provide value? Marking it out, looking at it.
Uh, this one,
No, the lower one.
this one, the one below here,
No, no, the one in the middle.
4.14, or
The one in the middle.
this one, 5.5.
No, no, no.
Which one are you talking about? The one in the middle.
Yeah, this one.
4.6 this level,
Yes.
4.69. I mean, I think this to me is just like a low, which if it just breaks, I'm just trying to see if the structure further goes down. This really doesn't matter. I think if the structure breaks and it comes to a lower here, I think we have already passed this. So this might not be as important as this key swing low and this key
Mm,
swing low. I think
mm,
we can ignore it. I agree to that. Yeah. Yeah, I understand. Yeah. Maybe this
mm,
might not be as relevant because if the structure is broken here, it's already broken. So we're looking at something which is different after the structure gets broken.
mm. Great, great. It's just because keeping clarity is also very important, and we could mark so many lows, and I think this one is like you obviously you can mark it and it's not a mistake, but I think it just adds like layers of complexity and it doesn't really provide any like big value. But it was definitely all right and correct. If you zoom out again,
Okay.
like zooming out and going for the weekly maybe even.
Okay.
All the lows you marked out were kind of lows and highs were kind of correct. If you go further away, like zooming out a little more, looking at the whole move a little more even, yeah, like that. For example, one high, the one you marked out, the last one is like the last one on the right side is what I wouldn't
Okay.
personally like mark out. Why? Because if you look at this whole range there, we bounced from 4 the first time you marked this low out, like at the low. We bounced
Okay.
from here to
Yeah.
the high, and the next high was not really like taking the previous high, and the next one which you marked
Okay.
out not even took this one out. So I think the ones we want to look at are the first one, like the first one on the left side.
Okay. This one.
Nope, the one above on the left side.
Oh, this one. Okay. The one that breaks it down.
The high, like the one,
Or
yeah, this one.
okay, this is the high that you're looking at. Okay, okay, got it.
Because we never
This is the
really
high.
took it. We never really took it. But a
Yeah.
very simple
Okay.
thing to do is then to mark this as the whole area, like from this high to maybe the candle bodies.
Okay.
This is what I like to do because this doesn't add as much of
Okay.
a bias as such a tight line, because if we see this tight line we think like, okay, it must be there. Obviously we can also mark an area, but
Okay.
this is what I would consider the most structural high, because we never really took it, we never really closed above, and the third one did not even take the second one, so it's basically a weak high, and we
Okay.
closed above, but it's kind of weak.
Okay.
But everything
All
else
right. Got
perfect,
it.
perfect, perfect, really good, really good. So one more thing. So how would you approach this chart now from a trading perspective? Let's imagine just like higher time frame trading. Where would you go long? Where would you go short?
So, okay. This we like I told you, if we are able to break structure and long is obviously I had marked the point 0.5 which is above this, right? So my longs would normally start once we start breaking the structure. And then I'll start probably as it goes deeper into this, I will probably look at long-term spot buys as and when the levels sit for a variety of let's say all the majors as it keeps going this way. If it breaks this structure and goes further up. On the other hand, if we do end up, let's say, bouncing back down, I think I would kind of, if it breaks the structure here, uh, that would again mean like a place of high premium. So I would look at higher short opportunities.
Mhm, mhm. So if you mark these areas out, how would they look?
So if I have to, wait, I think I had, so if I take this as one big swing, so sorry, so anything above this, I would say is broadly a premium zone for
Mm,
USDT.
mm,
I think higher probability of seeing, let's say, long setups, spots, and so on and so forth. I think as this goes the other way, leaving the levels aside, I think beyond the levels, just from a broad market structure standpoint, if I could find better spot opportunities, they'll be above this level. And below is where I would be looking at, let's say, short opportunities. I think obviously at a uh, deeper level, not really right away. So if it just goes below, this will be sort of my, let's say, sorry about the terminology here, but that will be my, say, short opportunities for it. So, and the reverse in terms of scalping, wherever I find an opportunity to scalp for longs, I might do it here, and wherever I find scalps for shorts, I'll do it here. So,
mhm, mhm. Nice, nice. And also, I think the 0.5 from the all-time high to the current lows makes a lot of sense, and then you have an overlaying area, but perfectly fine. Perfectly fine.
okay,
Yeah, your understanding is good. Very well, mate.
thank you.
Anything else you want to talk
Try
about?
to. Uh, so honestly, I think this broad, so with whatever we've done till now, I'm very comfortable with the broad market structure. But honestly speaking, I don't trade enough. That's partly because of the fact that I kind of convinced myself that I have to like study more. I am taking a few trades here and there. The one thing that I've realized is my fib knowledge is pretty weak, meaning in the sense that I'm not able to like draw out fibs well enough to find the confluence. So I've been working on that this week, and I've got something clicked this week, so I've been able to kind of draw it out better and kind of level it up with zones. I think I just need a bit more practice. If I'm going to be struggling, I'll get back to you. That's where I am right now. I might have to get back to you with the overall trade plan, trade picture, and setup because I'm not very aware of what my best trade setup is. I just kind of copy trade a little bit here and there and I try to study them.
Mm,
Uh, Currently, I don't really have a great strategy. I'm trying to learn. I kind of read about what the rest of the guys have also posted. I've read some of Turbo Andy's post on how he's gone through it. So it's kind of helped me. So I'm using all what they're writing down to kind of create my own plan. I haven't come up with a perfect strat for myself yet. I hope I'll crack it over the next month. That's the plan.
Yeah, and I mean, one thing is like the whole technical understanding, another thing is like the whole how to manage the position kind of thing. And I think there are two different things. And at some point, I mean, I don't say you're doing it wrong or anything. Do whatever you need to feel comfortable with everything. But like you said, you need to take more trades at some point to really learn to take trades, right? So this is like a different skill than the rest. And um, I think making or building a strategy is great, but at some point you just need to like pick one and stick to it, and there will be not the perfect strategy. It's simply then just executing it, like 20 trades, making a plan, having one strategy and simply executing it to get like the ball rolling or whatever you want to say. Um, but your fib understanding, like the fib you pulled is very interesting because many would not pull this fib, and it's a good fib. It's actually it's a great fib to market the whole range. So this I like this. And as said, I would, for example, also mark the all-time high to the old not all-time low to the current low at 4%, and mark this as swing as well, like because it's the move down and it's also creating a range, obviously. And then you have another 0.5 to look at, for example. So if you pull a fib
Okay.
from the all-time high, yeah, to the current low, yeah, this is another important one.
6.6. Kind of, yeah, it's kind of actually pretty much hits this range where we keep hitting and bouncing back.
Yep, exactly.
Okay. Yeah, yeah.
And bro is
So
playing
yeah,
poker
one thing.
while doing market structure, right?
Oh no, I wasn't playing. I just had a table pop up. I had registered some time back. Sorry. This one table popped up out of nowhere. I didn't expect it.
Okay. Yeah, as said, if you want to talk
Yeah,
about anything, we can do that. Otherwise, we can do different things as well. We can do it on another chart, or somebody else can also come up. I think Andy said some things. Couldn't we draw a range from the impulse low
yeah,
around June 22 to all-time high, then a more internal range, just more, also if you touched in the lows? I would say they get weak age time touch. I'm not quite sure what you mean. So draw from the June low in 2022 to the all-time high, a more internal range. He just marked now. Like the one he did already,
this one.
right?
I think he's talking about this low to this,
Yeah, yeah,
which sort of coincides with the down move also. It's interesting, right? This move kind of coincides with the other side. Yeah. Okay. Yeah.
yeah. Okay, okay.
Hmm. Okay.
Okay, yeah, thank you, Rooney. If
We can
you
just
have
ask.
anything else you want to talk about, or if you want to do another chart, or if anybody else wants to add something, go ahead. Otherwise, we can do something else as well.
Yeah, yeah, sure. I'll pass it on. I think I'll have more questions as I keep trading. I'll move to you. Okay.
Okay. Thanks, Rooney.
Yeah. Just okay. Maybe I can just ask this question, right? I think I have had this. I threw this trade open to you in the chat also last time. So I I I, I kind of worked out this trade, which was sort of. So one of the things is there's like a lot of uh, break of structure is one question that I keep reading, right? A lot of people want to trade after break of structure. So one of the setups that I saw is if this breaks of structure and there are key levels under, there is a probability that it will bounce back if there's other confluences. Confluences non-fib wise in terms of USDT movement, BTC movement, and so on and so forth. So
Mm-hmm.
here at this spot, I had kind of planned along in aligned with the USDT movement, which kind of bounced back, right? And BTC also moved back up after a fall. So this level that I had marked, I just took the trade and it was inside, it's still inside the level. And I took it once the, what do you call, at a shorter time frame, as it kind of broke the, remember if you were talking about this, about the trade that you took. So I kind of
Mm-hmm.
thought that this was a similar zone where it just came into the zone and bounced back up and it broke this sort of a channel line. So I've taken this trade. How do you rate this trade? Is this like a decent setup to try over and over again in terms of, let's say, uh, identifying multiple levels like this and seeing where it bounces off? Or do I need to see more confluence?
I think it's good.
Like I
I
didn't
mean,
check for fib also in this case.
we have confluence from dominance. We have confluence from BTC at range lows. We have confluence from ETH in a level. You wait for the break of structure, break of momentum with the trend line. The setup like breaking the low. And for example, if you zoom way out, you could treat this whole move of Sui as a range pretty much. And so ever we came back from all-time high the first time. If you go a little bit to the left, zoom a little bit more out, or scale the chart a little, yeah. You have this major low after the all-time high, and then we came back, and below this low there is liquidity. Even though the wick took already a lot of it, I mean it's crypto and like scammy and blah. But if you have a range and you have a FVG below, more or less like here, the touch of this FVG below the range is a high probability setup, also in my playbook. And every time market structure breaks, it's pretty much it's a bearish signal. But this does not mean we cannot bounce from
Mhm.
here. And many gonna look at this and say it's a bearish signal, but at the same time, on the bounce, many will probably add back or buy back because it makes them like FOMO again. And this is all liquidity and plays into the strength of the level. But I would say it's a very valid setup, and you also executed right.
Okay. I've set up the trade, so I'll share feedback on how it goes. I've set up with the stop loss and position management as we discussed before, and
Mhm.
I'll keep you posted on this. Yeah.
Yeah,
Yeah.
great.
Thanks. I'll kind of sign off now. I'll pass it on to you.
Okay, thanks, Rooney.
Yeah. Thanks.
Okay, so guys, anyone else want to talk about something? Sebashiro, I hope you're doing well. You said you're not feeling well, as far as I can see. I hope you're doing well. I hope you're all right. Yeah, sure, Andy, sounds great. Getting more strength. Yeah, I hope you get well soon, my friend. And I hope you can see on your phone. That's good. Can you show us how you formulate a stop loss position wise, and if you would take one of the trades and why you place it there, struggling with position stop loss in places where the likely will be less likely taking this etc. Yes and no, because it's I can do that, but it's similar to where like should I TP and all that, because it's like a very wide and broad topic. Mm, but I can give a quick overview. Let me. No, why is it doing that? Come on, share the screen and let's go. Okay. So in terms of like stop loss placement, first of all, there is no single answer because every situation is so different. Second of all, if you lack experience, play it wider and you tighten your trades with experience. What I see people doing, they come to trading and they expect they need to like rip or nail 10-hour sit-ups all the time, which is nice sometimes, but most of the time, if you play solid 3, 4, 5 hour setups consistently on a higher win rate, it's more fun and you can do that way better as beginner because playing high R means a lower win rate usually, and a lower win rate means more emotions, means more failures, means even a worse win rate because you then do stupid stuff. And so the best thing you can do is to play a bit wider than you would usually. This is the first thing, and then also what I see people look at this refined level, and while in this case it worked kind of perfectly, many times it will overshoot a little bit or something. So give it a little more room and especially consider that everything you take within this area is pretty much this demand here, right? So you play this demand and you refine it down to this area. And so the trade could look like this. In this case, I didn't do that, but the trade could look like this. Looks way more sexy, but obviously it could also been stopped out if I only covered FVG like this. I might as well be stopped out now. And like this, I'm not stopped out. I have no stress, no nothing. This is what you can do, for example, for stop loss placement beforehand. So usually if you place your trade like this, you should place it wider with a limit order, place it a bit wider, get filled, be happy in the position. And then what I like doing is then I tighten after the first reaction. Because only if structure is forming, like for example, here we bounce from here, you can then say, okay, here's the low. And if you undercut this low, I don't want to be in this position anymore. And then you put your stop loss, for example, here. But before that, I would not play this so tight. But this is me, for example. And you can apply this knowledge basically on every single trade. You hit the level, and only once the low is in, once the reaction is forming, once the trend line is breaking, for example, in this case, the trend line, um, where is it? Worked kind of well here. You have this steep trend line. You see it breaks here, and then you can still enter here within the level, and your stop is somewhere below this low. And that's it. And it's way easier than to define beforehand where price will go because oftentimes it's also a little bit of randomness depending on how people position themselves and all those things. I don't even know what I marked out here. Yeah, 4 week here. And technically, in this case, if I place my stop loss before, I would always cover the FVG in this case, which would be this point here, right? So let's mark this out real quick. This is the green line, and this would have been my trade covering the FVG in this case. Yeah, would have been stopped out. But if I wait for the first reaction, the shift in trend, the trend line break, whatever, I can then simply put my stop below this low, and I have a way easier time to define my entry because you see we broke it here. I mean, if you look at this, we broke it here. We went even a bit sideways, so you had a lot of time to enter in this level, put your stop loss below this low, and that's it. Very simple way to get into trades. And if you place your limit order beforehand, make sure you place it a little bit wider than you would usual. Aim for 3 to 4 hour, not 10 or 5 to 10 hour, and then you will have a way better time to gain experience. And once you got the experience, you can play a lot of things way tighter. But I think, as said, the best way to tighten your setups is once price is there, not before. How do you backtest things when you start out? I'm at the stage trying to refine an edge after learning the basics and more advanced stuff. So there are several things depending on what you want to backtest, because you can also backtest like statistics and data in terms of how often does this chart does this after maybe bearish news, bullish news, whatever. This is obviously like just looking at historical data and compare it to charts and like analyze your findings. But if you want to backtest a certain strategy, for example, the money tower edge, breaker blocks, auto blocks, whatever, you can do that either in replay mode, just like replaying best case, you go for a chart which you don't know the history of, and then you mark out the levels, which can be kind of annoying if you have to hop timeframes all the time. And then you track your statistics. Simply like you put a trade, you go in, you define your risk, and and then you write it down. This is like the manual way, and you can do that with TradingView. And if this is too like time consuming and stuff like that, there is software like TradeSeller where you have a chart like TradingView, and but if you put up your trade like this, and you have a window here, and you set up your risk and all that, and once price is there, you get more or less filled, and it's tracking the statistics for you, which is very handy, as said, if you want to save time, if you don't want to do this all manually. And it's also nice because it calculates everything, basically your risk to reward, your win rate, your everything. And it's a lot more fun and not as time consuming, but obviously it costs something. So the question is this or that. Yeah, I used also TradeSeller for backtesting charge strategies, but I also did a lot of backtesting, like data backtesting, pretty much. And this is simply done by collecting data, because people also ask me often, like, how do you form your higher time frame bias and all of those all those things. And it's very simple. No, it's not this chart. Very simply by collecting data, right? So this, for example, oh, do not delete it. Or this, collecting data around pivot points, and what whales said, what banks said, what news said, and all those things. And look at the chart and compare to sentiment, compare to order flow. I don't need trade seller for that. I just like mark out these things and compare to chart and apply some logic and reason. And this is also backtesting to me, because many people, they hear, okay, news and manipulation, and then they go out and say, okay, bearish news are bullish news are bearish. But in reality, it's so much more nuanced, and there's so many layers of gray between black and white. And it's a very good idea to do stuff like that as well. And this is, to me, it's also backtesting. But as I said, for chart strategy, I would personally also go for trade seller, because you got everything in one program. As said, you pull up your trade, it calculates everything. It's way more fun than writing it down by hand and stuff. Good. Yeah. Andy, if you want, we can talk about the psychological stuff you said. So please come up.
Hello.
Hello.
Okay, so there is there is a lot of stuff going on at work right now. So um I I am a software engineer, and like in the end of each year there's usually like a big release. So you gotta deliver to the customer basically, and that always coincides with uh, a lot of stress, let's say. And I do really feel that right now, since for example, I do wake up around like 4:30 to 5, then I do like the trading stuff for around 2 to 3 hours, and then yeah, the normal work hours are like around 10 hours ish right now. So I mean, it kind of adds up. I also have my gym stuff a few times a week. Then obviously I have loved ones, and yet uh, it gets to something right now. Um, um, really getting like subpar sleep basically, and kind of scatters my focus and so on. So how I personally then approach solving that stuff is not well, I can't drop work, obviously, so I gotta do that. Um, and I don't want to drop like the trading stuff, but I stepped a little back in the sense I do track majors every day or every other day, basically. I have 4 trades going on right now, so I track them. Um, but I don't really look uh, into getting into new trades and stuff because that would like just add further, you know, time to monitor stuff. So I kind of trimmed down, I guess, the effort you could say. So what I do right now to still not cut down my trading time to 0, but um, to around 1.5 hours before work. It is right now. It's, as I said, the majors every other day, and then monitoring my trades I am in right now. And then also, if I still have time left, I do go over my journal. So, um, as in, I do go over stuff I've already written down and like um, going over your own thoughts you like wrote down, let's say a month ago or whatever time it was. Um, I think that really helps as well. And I started that 1.5 weeks ago. And yeah, I kind of feel a little more chill right now. And I actually don't have a feeling of missing out. Not in the sense, okay, I need to get into trades and stuff like that, but more in the sense of um, I want to get better at this trading thing, right? In general, it's yeah, not in the sense of getting into trades, but more in the sense of doing the process, right? But I mean, then I kind of had like a little talk to myself. I do sometimes when I go for a walk, for example, and I was like, yeah, just review your stuff, and that's something that needs to be done anyway, right? And um, it kind of it doesn't cost as much brain power for me as it does when I do like new stuff, I guess you could say. So that kind of helps. Um, and I also changed up my gym routine a bit. Like um, not that I do less in a sense, but doing a little bit of supersets and stuff, going through it a little faster, and yeah, reading the end of the day. That kind of I didn't do that like the weeks before when I had like I don't know 16-hour days. So reading was something I didn't do anymore. Um, but now kind of changing the trading stuff and like my gym routine. Um, to a little more to be a little more less time consuming. I also got into reading a little more again, and that actually pieced my mind when I do it like before sleep. And obviously, I am still stressed out a little bit, but um, it it gets better, and I feel like changing the stuff up that I can change actually. Um, it it kind of pieced, kind of like gave me a little bit more of peace of mind, and yeah, that's how I kind of approached it. And so far, it's working. But like in the beginning, it was driving me nuts, and um, yeah, now obviously I get that feeling every now and then again, but it it gotten a lot better. I mean, Aristo isn't here right now, but I think 2 weeks ago or something, he said something similar that work is killing him, and I mean that kind of was true for me as well. But maybe if he listens to that in the recording, maybe he has something to tell me as well, or maybe he can get something out of this, or yeah. So that was something I wanted to share because I think it might be useful. Maybe it's not, but I mean, I'm not a full-time trader, in brackets yet. So I do have that other stuff I need to do. Um, yeah, so I don't know if you might have something as well to add, or how you approach, like, I guess, let's say external, as in external from a trading point of view. Yeah, problems, stress, whatever.
Mhm. Thank you for sharing. I think it's very valuable, and also you have a very good approach to handle it, because burning out helps nobody. And while trading is not really a physical demanding thing, so I also have this topic with mentees of mine. It's not physically demanding, but it's mentally so demanding. The emotional control and all of those things you have to process, all the information, all the data. It's so many things, and then you add work on top, and then you maybe add some like private stuff, family, those things on top. It can be, like Victoria says, mentally draining, and not just a bit, but it can also be mentally extremely mentally draining. And you need to see yourself like as an athlete, and you have only limited capacities, and this is physically true, and this is like mentally true. And knowing this like kind of thin line where you have balance between like don't do too less but also don't do too much is very important, because as I said, burning out helps nobody. Because if you burn out, I, for example, I overdid it a lot in the beginning with trading, and even though I had not really a work to like a job to go, but I really wanted to make this work so bad, because I knew if I don't make this work, I have to go work eventually. Because I knew the market won't go up forever, which was helping me a lot during this time, monetary wise. But I knew, okay, this is not going to hold forever. I want to learn trading. And so I put in like 14, 15, 16 hours a day living in the bus, staring at a screen. Like really, I was completely mad, and I was not ready for so many things. And I pushed myself through this until I couldn't really sleep anymore. I was like, I closed my eyes and I saw like candlesticks in front of my eyes, and I need to I had a headache. You can't imagine. It was horrible, and I couldn't really look at my screen or at charts or anything like for 3 or 4 days. And then I slowly recovered, and it was like more or less touring my what's band in English, like a band. You know what I mean? What's the word? Tendon.
Bandwidth.
Like
Mm,
no,
yeah.
like hurting my tendon or something for sport compared to physical injury.
Oh,
and and I understood, okay, good, if I push it too far, I might like either lose interest, get sick, or feel horrible, and I don't want to do it anymore at some point. So I need to find balance, and consistency is way more worth than pushing it too hard for too long. And as said, I see a lot of people burning out, a lot of people also quitting then trading because they push too hard, they give it too much. And instead of like burning out within a year, consistently putting in like 3 years or something is way more worth, way more. And so, like, you handle it, turning down the time a little bit. And I know it's annoying because you really want this. And at the same time, you need to go to work, you have other obligations, all of those things. But like the way you approach it is good. And you are still more or less in your beginning stages, and you're on such a good path. And if you ruin it now because you push too hard, because you make things permanent that are like not good behaviors regarding trading, you don't help yourself. Like, keep it easy like you do it, and accept that it's not possible to go in the same pace like, for example, a month ago, just because of outer circumstances. And I think it's very wise to accept that.
yeah, that's great. So personally, I'm from like a professional sports background, and I know that feeling of, on the one side, physically burning out and then getting injured and then being out of the game for, let's say, half a year, and that throws you back way, way more, as if I just listened to the signs earlier and went a little down with like training, and then you can just you obviously can recover better and whatsoever. And that's why I kind of went with that path of, yeah, turning down the time a bit, but still putting in the work, right? Obviously, it's not the same workload and stuff like that, but it, yeah, as you said, the consistency is still there. Not in the
Mm.
same intensity, obviously, but it's still there because I know how it feels to be out of the game for a long time, and I mean, I don't want to do that.
Yeah.
So that was kind of my idea why I did it this way.
Yeah, and it's great. As I said, I think it's the best approach you can have. And like you said, you focus more on studying things you learned already. And you can compare that with like, okay, you feel like your body is weak and you can't really train as hard anymore because you risk injury. You don't increase like weight or you don't increase weights or something like that. You maybe keep the consistency simply to stay there, but you don't increase, you don't add more pressure, more weight, more whatever. Same with trading. If you're able to stomach all of those things, and you probably learned a lot of things like in the last 3, 4, 5 months, and now and stop giving yourself the time to stomach them and using this time where you can't really put in more intensity, perfect. It's like win-win. You keep the consistency, you stomach those things you learn already, and you don't always need to add new things. Sometimes it's also good to just like stomach everything you already got.
Yeah, there were actually so many aha moments, like knowledge turned into understanding just by going over the stuff, which I maybe would have done like, let's say, in a month or in 2 months if I didn't have to turn down the time as I did right now. So yeah, on the one side, it's obviously a shitty situation right now, but on the other, there's also good stuff. So yeah, rather focus on the good stuff there.
Yeah, make the best out of it.
Yeah.
Great, thanks for sharing.
So yeah, hope it helps. It actually helped me as well now sharing it. So maybe some others take something out of it as well.
I think it's very valuable
Yeah.
what you shared, really. I said, and the funny thing is, it still annoys you. You're doing the right thing, but it still annoys you. You see the positive, but it's you still would like to do more. But as said, it's true
Yeah.
wisdom. It's true wisdom to stay strong and like knowing you know the right thing. And this is oftentimes it's in life. It's exactly like that. We know what is right, and sometimes what is right is less. So I also like last year I trained like a maniac and stuff like that. And at some point, I started listening to my body again, and it just said to me, "It's too much, man. It's too much." And obviously, I have goals. I want to have this physique, and I want to have this and that and that. Sometimes less is more, and this is then the real wisdom to be able to also step back. And as I said, I think we oftentimes know what's the right thing to do, but then really doing it—that's the big difference.
Yeah. Uh, What's the saying? Like, do as I say, not as I do. That's what I like hear a lot of people who have actually really good advice, but like they don't stick to it uh, themselves. But I mean, that's. I mean, so yeah, I actually got fucked in the past a lot because I didn't listen to my body, or what? Not a lot, but I like had like two injuries. The second one was actually like a career ender. So I guess I paid the price and I learned from it. And yeah, sometimes when I feel like I did yeah, these past weeks, I guess, was like, yeah, I don't want to get fucked again like I did in the past. So
Yeah, but I
yeah.
mean, lesson learned. Lesson learned might was a hard
Yep.
harsh lesson, but at least no. And as that people
Yeah.
underestimate like the mental draining factor of trading. I mean, we all know that it's draining and that it's tough mentally. But what happens if you push it too long? As I said, I've seen what happens to my mind. I almost got a little bit crazy during this time, and my it was really like my brain was hurt more or less. I couldn't use it anymore in the proper way. It was like jelly, felt like jelly, and as I could imagine that, especially like and think about it, you work 40 hours a week, then you add all of this on top, and usually the normal job is already very demanding. The modern world is so complex. It's not like you whatever like hunt a deer, you know? I mean, it's also complex, but you know what I mean? Usually modern jobs
Yeah.
require complex thinking already, 40 hours a week. Then you add trading on top. Then you add like relationships, family, all of those things on top. Um, yeah, your brain is your biggest resource as trader, so taking care is important.
Yeah.
Yeah, but also what Rooney says, feeling a bit guilty over time not spent learning after knowing there's so much to learn. Yeah, and this is the thing, like, but like the balance between putting in the work, the necessary work, the consistency, but also knowing where the limit is, and it's okay to exceed the limit every now and then, to like push the boundaries, exceed the border, and all those things, but pushing it too far, too hard leads to injury.
I mean, in the end, this thing, uh, you're already like in for a longer time than I am, but it's like it's a high time frame approach. And I mean, it has a future, so it's a process and it takes time, right? It's the same as if you go to the gym. You're not gonna look like Arnold after a year, right? So,
Nope.
um, consistency over a very long period of time is what's needed, and sometimes you can trim down your like training hours or whatever you want to call it, but being consistent is, yeah, is key.
Yeah.
Yeah.
I mean, Rooney, to look like Arnold, you probably need also those fancy substances you don't get anymore as well.
There's a little extra stuff, but yeah.
But still.
there's there's some juicy indicators you gotta take. Yeah.
Okay, feels a little bit like the White Belt podcast now, but it's great. It's great sharing experiences, learning from other people is amazing.
Yeah, that's true.
Okay,
Um,
anybody, anything to
um,
add? You want to say something, Andy?
no, I think I have nothing to add there anymore, apart from like turning circles right now. So
Yeah, I think
if somebody
we
else
covered.
has, yeah, if somebody else wants to say something, get on stage, feel free.
Thanks for sharing, Andy.
Yeah.
Okay, guys. Um, it's 5 minutes. Any more questions? Anything you wanna bring up? Because other than that, we can slowly wrap it up. Very happy to see so many of you consistently. It's a lot of fun working with you guys. Yeah, sure.
Hello
Welcome
again.
back.
I mean, it's probably not doesn't take that long, but okay. Let me do it on one screen. So I think in one of your live streams, or not live stream, I think one of our sessions I couldn't attend, you had like the PayPal chart open,
Mhm.
and I kind of looked into it as well, and I was wondering if that thing here is actually like something hidden, as in like those candles are sometimes hard to read for me, as in, is this an FVG? Is this not an FVG? For example, like if we take this wick high to this wick low, would that be an FVG? This one to this one, would that be an FVG? This isn't candle bodies. This is just wicks of just previous or from this candle. Um, yeah, I'm just wondering how to approach that.
So
Um,
technically, it's not an FVG. A FVG is by definition the
yeah.
body between those wicks. But the thing is, a fair value gap is a gap in the chart because price moved so fast past it that you could, for example, use those volume footprint candles to define if this is a gap within the wick. Because if the wick is empty, we could consider it a gap,
Mm,
technically, like from an order flow perspective. But it's not, it's definitely not from like out of the book. Like the thing is with such things, best is to observe them, more or less backtest them, see what happens once the area hits, and you can, for example, use the volume footprints to confirm if there is something. I mean, if the wick is filled with like volume in this area, it's definitely not a gap. But it could be
yeah.
something. Well, who knows? Who
I
knows?
yeah, I just kept it on the chart because uh, didn't want to trade it, but because I wasn't sure. This did look fishy, uh, but I just want to keep it, as
Yeah,
you said. Maybe that's maybe I'm onto something here,
maybe that's the
but who knows?
next big thing. Who knows?
Yeah. Okay. But yeah, that I mean, I wouldn't have treated it that way either, but I mean, yeah, just wanted to double check.
Hmm.
So, yeah, I guess that would have been that quick question.
Good, good. And also, Rooney, what you said, like charting from scratch, stocks from scratch. I did that a few. Always wanted to, almost wanted to say episodes, but I mean sessions ago. But also we can do this next time. For me, it's always good to have some topics I can rant around about because sometimes it's not much happening PA wise. So next time we pull up a stock chart you want to see, um, and we're gonna chart it from scratch, and pull, we can pick whatever you want. Um, and yeah, no worries. As said, we can do this again. There are many stocks to chart. No problem.
I also like that
Great, great.
idea.
Also, Nova says brain really heats at like 5 trades, even practice ones, just trying to consider all the different variables. And it is like, if you think about it, as humans, obviously we always had some kind of variables in life, and like, should we pick these berries? Should we hunt this animal? Whatever. But nowadays the overload of information is so insane. It's like, and then you take something like trading, the amount of data your brain needs to process. As that, if I it's still like if I spend a whole day in front of my screen analyzing, also talking about trading, taking trades, whatever, my brain almost hurts a bit because it's so tired, and we need to gradually increase that. And it's like with progressive overload, like with weight training. You can see it basically in the same way. Yeah, charting from scratch. As said, it's on the list. We're gonna do that on Wednesday. We can also do that on Saturday. In the end, all of those sessions are made should be made for your progress. You can always ask for something. There is no wrong question, no wrong topic. Um, but other than that, I think we're gonna do we it's evolving in something kind of nice. Maybe it's going to be the White Belt podcast very soon. Okay, guys. But I'd say we wrap it up here. I'm pretty done, pretty cooked. Thank you for participating. Thank you, Andy, for sharing and for being on the stage. Also, thank you, Rooney. It's great to talk to you guys. Um, we talk on Wednesday.
See you
All
on
right.
Wednesday. Thanks.
Bye, guys.
Bye bye.